Yes, it's been a pretty rough few days following the collapse of FTX. As many as 134 affiliates were affected. We're talking $50 billion worth of liability. Check out this journalist Brian Sullivan's tweet here, who's suggesting that once the dust settles, FTX may be viewed as an even bigger disaster than Enron was. Many crypto projects, of course, were severely affected by this FTX fiasco. Some projects actually were less affected. We are going to put on a brave face and we're going to cover the news today in a project by project context. We'll be discussing those projects most heavily affected, including BlockFi and Bitcoin and others, of course, and some that we feel are being less affected right now, including, to your surprise, perhaps crypto.com. Welcome to the channel, guys. My name is Maddie and this is Altcoin Buzz. Of course, we're going to be going through the news and we wish you the very best of luck if you choose to invest during this slump, but never official financial or investment advice. Okay, to kick off the most heavily affected projects here, we're beginning at number one with BlockFi. And this is a generally good chart, as you can see here, Sam Bankman-Fried's investments, to get a sense of really the scope of the situation. BlockFi, if you're unfamiliar with it, is a CeFi platform, a centralized finance platform. And as such, we come across three major issues. Number one, they invested in GBTC, and they are the second highest holder of GBTC with 19.85 million shares in a GBTC trust, about $500 million worth. That's at least according to data from July of 2021. However, due to the reduced demand for GBTC after the launch of 3 Bitcoin ETFs in Canada, the GBTC premium suffered pretty quickly. It actually disappeared and a negative premium appeared last year in March of 2021. The second major issue for BlockFi is that they've encountered loans that now Three Arrows Capital can't repay. So they took a big hit when 3AC collapsed and they were forced to liquidate Three Arrows Capital's collateral assets. And they were only really spared the fate of bankruptcy because Sam Bankman-Fried agreed to provide a $250 million revolving line of credit. So they became entangled with SBF and FTX, unfortunately. And at number three, with the FTX and Alameda crash, BlockFi came right up to the brink of bankruptcy. CNBC crypto trader Crypto Manran, they tweeted that BlockFi had a $600 million or more loan to FTX and Alameda, and SBF, of course, was unable to repay. On the 11th of November, BlockFi suspended their trading. Purportedly, credit cards are blocked, at least according to many users, based on self-reporting. And now it seems that the latest is that Binance US and Curve are in a bidding war for the basically patronage of the BlockFi credit card customers. Heavily affected project number two that is suffering due to FTX's collapse is CoinShares. Now, CoinShares confirms robust financial health and quantifies limits exposure to the FTX exchange, while also confirming that the group had no exposure to FTX's sister company, Alameda Research. CoinShares has significantly reduced its exposure to FTX over the past week to approximately 26.6 million pounds, or the equivalent of about $31 million, which is a lot. And as you can see here, based on their own announcement from the 10th of November, their total exposure is comprised of 190 Bitcoin, so about $3 million, 1,000 ETH, about $1.2 million, in pending withdrawals, which were submitted prior to the halting of withdrawals by FTX. Add to that approximately $26 million worth of stable coins and just over $100,000 of other assets. According to CoinShares themselves and their own announcement here, they're claiming that the financial health of the group remains strong. And look, I'm not saying that's not the case, but perhaps take it with a little bit of a grain of salt. Heavily affected project number three is the big daddy of them all. We are talking Bitcoin. We are talking BTC. Just take a look at the 7-day chart here. We had a drop from 20.7K to 16.5K. So $4,000, approximately 20% over the course of the last week. That was a big, big drop. And then, of course, and as you know, as Bitcoin moves, so too does the rest of the market. In fact, the movements of Bitcoin are amplified across the rest of the market. So we saw altcoins bleeding a whole lot more as a result of this precipitous Bitcoin drop over the last week. And there are all kinds of concerning reports here when it comes to FTX's role in the drop of Bitcoin. According to Bitcoin Archive here, FTX had 0 Bitcoin in actual assets listed in the bankruptcy documents, yet had over $1.4 billion in BTC liabilities. That's according to the Financial Times, i.e., and that is to say that they sold you fake Bitcoin. There's also the issue of Solana wrapped BTC, SOBTC, as well as SOETH. We'll be getting to Solana in just a moment here, but this was another problem. Some of the numbers here suggest over $40 million in unredeemable SOBTC, $6.6 million in unredeemable SOETH, and just over $1 million in unredeemable SOUSDT. It seems they also created 16,000 wrapped Bitcoin or WBTC that now cannot be unwrapped. And according to the FTX Alameda balance sheet, they only actually have in possession 1.1 Bitcoin in actuality. So that means everything else is either wrapped or synthetic Bitcoin on other protocols. And as pointed out here, is potentially fake. Not good. Okay, as promised, we're talking about Solana now. Heavily affected project number 4 is SOL. Check out this recent video because I do feel there was some hype here and some real blackpilling when it came to Solana. The project is in better health than some would have you think. We talked about in this video, which should be popping up on your screen, about how the unlock was also a major factor that seemingly would have affected the price, but the impact wasn't as disastrous as I think some people were expecting. Anyways, check out that video for more information, but let's talk about the SOL situation here, as tweeted by Satoshi Stacker. Due to the FTX Alameda situation, SOL has crashed over 50% in the last week, and fears have risen that the price of Solana as well as the Solana ecosystem may never recover. This is actually a great thread, which I'd encourage you to check out. So Satoshi Stacker on Twitter, the handle is @StackerSatoshi. And particularly, I want to highlight the 10th entry here in this thread. It's especially poignant. So the Solana team did not lose their funding, and that is important to point out. The co-founder confirmed they held no assets on FTX and still have about 30 months of runway under current conditions. 30 months, we're talking 2.5 years. In crypto terms, is plenty of time to turn a project around and make some major moves. So, silver lining. Despite that little dose of optimism here, we are certainly not out of the woods, nor is Solana. And as you can see here, they had a recent drop in TVL, total value locked, from about $625 million or so dollars to $331 million right now as I record is the current mark. We're talking a drop of almost 50%. So this project has suffered. Okay, but now let's talk about some of those projects that fortunately, for one reason or another, were relatively less affected by the collapse of FTX. And I want to go back and remind you guys of this image that we started the video with. So again, Sam Bankman Fraud at this point, as far as I'm concerned, his tentacles have extended into Alameda, FTX, FTX US, and FTX Ventures. And then you have the subcategories and all of the different affiliates there that are listed and potentially affected. And we're going to be discussing now Aptos, which is at the very top of the bracket here under investments, which is under FTX Ventures. And Aptos represents our first entry in those projects that are actually relatively less affected here. This is their statement from the 9th of November at Aptos_network, a message to the Aptos community. No Aptos Labs or Aptos Foundation treasury is held by FTX. The network will continue to operate as expected without impact from these events. We have a lot to be excited about and look forward to building for the future. Let's move. An encouraging statement, to be sure. We have not wavered in our enthusiasm for Aptos. Check out this recent video if you've not already. But for better or worse, and as you know, the market collectively right now still has a very skittish sentiment. People are still feeling very fearful. So despite that statement, I guess it wasn't enough to rally all that much confidence. You can see that the price of APT is still down significantly, actually, over the course of the last week, from a high of just over $7 to now sitting at about $4.19. Again, this is the 7-day chart. Less affected project number 2 is Mysten Labs and SUI. And Evan Cheng, the co-founder and CEO of Mysten Labs, had this to say. Mysten Labs Finance. 100% of our Series A and Series B raises are in USD, and 100% of the Mysten Labs treasury is in cash or government bonds. Our hearts go out to those that are hurt by what's happening, but Mysten Labs is unaffected otherwise. We are built for the long haul. Mysten, of course, is a project that we've been covering as of late. They don't have a coin yet, but their ecosystem is something that we're keeping an eye on. It is impressive. And when we say Mysten, we're talking about Mysten Labs and SUI interchangeably here. So this is an ecosystem that we like. Stay tuned for a coin. We like these guys for the long haul, regardless of what just happened with FTX. And finally, the last project that we're looking at today, and one that is less affected relatively by the collapse of FTX, is Crypto.com. And Chris Marcelek, the chief executive officer of the Singapore-based Crypto.com, he insisted that it had a robust balance sheet and took no risks after investors took to Twitter over the weekend to question a transfer of $400 million of Ether tokens to another exchange. Check out Chris Marcelek's Twitter for further information. He's being pretty open and transparent about the whole situation, indicating that they had very, very little exposure to FTX. And he's gone out of his way to say that he's going to prove the naysayers wrong because, of course, withdrawals have been building over the course of these last few days. But Crypto.com, in our estimation, and according to Chris Marcelek, appears to be in good financial health. It's been a rough few days, but ultimately the main takeaway, the lesson that we want to leave you guys with can be summed up in 4 words. Don't practice unsafe sex.